Good morning, ladies and gentlemen, and welcome to the Emerson PLC investor presentation. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged. They can be submitted at any time using the Q&A tab that's on the right-hand corner of your screen. Please just simply type in your questions and press send. The company may not be in a position to answer every question it receives during today's meeting, but the company will review all questions submitted today and publish responses where it's appropriate to do so, and we'll make these available to you via the platform, and we'll email you when they're ready for your review. I'd also like to remind you that this presentation is being recorded. Before we begin, we'd like to submit the following poll, and if you'd give that your kind attention, I'm sure the company would be most grateful. And I'd now like to hand over to Charles Vaughan, Corporate Development Director, and Graham Clark, CEO from Emerson. Good morning to you both.
Good morning, and thank you. Good morning, everybody that's online listening to us. We're going to go through a presentation which will probably take us around 25 minutes. Because there'll be a range of people watching, we're going to cover off sort of basics of the project, of the company, but also then update on the most recent announcement from last week, and also the next steps going forwards from here. So just in terms of an overview of the project, the ChemiSet project in Morocco, it's a high-value project. Our feasibility study that was completed last year identified a net asset value of $1.4 billion. That was based on a potash price forecast at the time of just over $400 a tonne. The price now, spot market, is well over $800 a tonne in some of the markets, and that would actually put our NAV up closer to $4 billion. So a high-value project, a lot of confidence in the potash price, and we'll talk a bit more about that as we go through. Potash itself, much in demand, increasing demand historically over the last 15 to 20 years, and that is all forecast to continue going forwards, and we'll cover that in more detail as well. When we're in production, we're in the bottom quartile, very low cost producer. Various reasons for that, partly the ore body, the closeness to surface, and also the location and access to a port, which gives us access to all of the main fertilizer markets around the world. All of the work we've done on the project to date has been done to the highest standards, above and beyond what would necessarily be required in Morocco. So all of our environmental and social work, assessment work, has been done to World Bank standards. We have a very supportive jurisdiction. Morocco, compared to a lot of Africa, is a really stable jurisdiction. They understand mining, they understand the benefits, and they're wanting to develop the economy of the country and are very much supporting inward investment of the type that we're doing on this project. As we stand, we have a 19-year mine life. That's from less than half of the resource that we've identified, and we fully expect, as happens with most mines, certainly potash mines, which is my experience, that as we mine forwards, we'll explore more, and we will probably more than double the life of the mine over the period that we're operating. So potential to get well over 30 years of production. One of the key aspects, and it's shown on the slide in the top right-hand corner, is if we have the right expertise in place. I joined the company the middle of last year, taking over from Hayden, who'd driven the company forward to the point of delivering the feasibility study. But I came in, was brought in because I have the experience to actually build the mine and operate the mine. And that was my sole intent when I joined the company. And that is absolutely the focus of the whole team now, is to take this mine forward into production. I spent 20 odd years operating a mine and another 8 or 9 on mine development. So we're building the team out now around sort of my expertise to make sure that we have all areas covered, and we'll take this project forward into construction and ultimately into operations. And we're still targeting to do that in 2024. Just to look a little bit more now about the product. Fundamentals behind all fertilizer demand is a growing population, an increased, therefore, need for food, and actually the production of food is outstripping the increase in the population growth proportionally. And then potash demand is actually outstripping that as well. And that is because the more intensively we use the agricultural land available, the more the nutrients are taken out of the soil and the more we have to put back. And what this results in is an annual growth in terms of the demand of 1.5 to 2 million tonnes of potash per year. And given our production is around 750,000 tonnes per year, we're actually less than half of 1 year's increased demand. So absolutely a demand for the product. And at the moment, with the price as it is, of over $800 a tonne. Obviously, it is the perfect timing for us to be moving forward through the remaining funding activities to get this project into construction. Great location. We'll talk a bit about the logistical benefits in a moment, but I think it's important to understand that Morocco is actually already a fertilizer hub of global standards. It has OCP, the world's largest phosphate producer, operating in the country, and you can see the 4 orange circles there on the plan show the locations of their mines, and they have fertilizer production at the port of Jorf-Lesvar. They use Casablanca to export. So we're very much developing this project in an area of the world that understands fertilizers and understands the benefit of that, and that really plays into our hands as well. These are some of the outputs of a socioeconomic study that we did last year, which just shows the benefit to the Moroccan economy of this project. And this is very well understood at a local, regional, national level in country. I think the key ones that really strike home, certainly in the local area where we're building the project, is the number of jobs created, which is just under 2,400, and the increase in local GDP, which is 40%. So it's transformational. This project is transformational in the region of Morocco where we're building it, and this is very much understood, acknowledged, and we're getting a lot of support for the project. Just a little bit more about the logistics and the location of the project in Morocco, North African coast, easy access to the port of Casablanca. And this example, we've shown this in presentations before, but it is really important to understand the difference that this makes to our operating costs and where we sit on the cost curve. So we can export our product from the site at Chemiset down to one of the main fertilizer markets in Brazil, $100, over $100 cheaper than the Canadians can from their mines in Saskatchewan. So you see the Canadian producers, Saskatchewan, 1,700 kilometers by rail to get to the port of Vancouver, high royalties to pay to the Saskatchewan government, and then via the Panama Canal down to Brazil. And we have $100 a tonne advantage over them. And very similar for the large producers in Russia as well. We have a real advantage here, which means that we're actually immune from the potash price to a large extent. But obviously, when the price is high as it is now, we make it significantly higher margins than anybody else. This is summarized on this slide, along with the sort of advantages of that the geology brings to the development. So we just here simplistically compare our development at Chemiset to a typical Canadian potash mine. So on the top, we're 500 meters down to access the deposit. So we can do that with 2 declines. There's no aquifers to contend with. And we've got an estimated cost from the feasibility study of around $35 million for these declines. If we're in Canada developing deep shafts through an aquifer, which is very typical, it's also the same with the Serious Minerals, now Anglo-American project in the UK, those shafts will cost over $1 billion. So it's low capex, but also, and very importantly, it's low risk in terms of the construction methodology. And then with the infrastructure set up, as it is in Morocco, we're only 15 kilometers from connecting to the main power grid. We've got a highway passing the site to take the product down to the port of Casablanca. And I've already talked about the logistical advantages that we have. So low capex, low risk, and it is a standout project in the potash development space. I'll just hand over now to Charles to go through the next 2 or 3 slides, and then I'll pick it back up again.
Hi, morning. So some of you would have seen this slide before. We think of this project in terms of its net asset value, as do most mining investors have to think about development stage and companies that they're going to invest in. What we show here is a couple of the really kind of grade A deposits that were discovered and were subsequently either taken over by larger companies or financed into production. You can see that they can get up to around 50% of their net asset value before they move into production, after which people prefer to value them on EBITDA multiples. Yes, we could value this on an EBITDA multiple in the future now, or think about it in those terms, but we prefer to think about it in terms of net asset value, because that encompasses what you have to spend to invest in getting the project up and running. What we show here is that, sure, we announced this very good deal and the share price moved up to 7 pence, but even at this sort of territory, we are at an extreme discount to our net asset value. We understood that at the time when people were sort of questioning how we would actually get the whole thing financed and how realistic it was. But what we contend is that having done this deal for so much of the equity, we have knocked over a significant part of the risk of getting this whole thing financed. And I think what you'll see next is movement on the debt financing, which is a very big part of the puzzle. And when we've done that, I think that people will start thinking, okay, well, what last remains before we can start valuing this at something even at 25, 30% of NAV pre-production. So yeah, we think that there is a huge amount of equity upside if we can knock over the final risks in getting this thing into financed. Feasibility study last year, that all of the numbers show this is a good project. Banks want to lend on a good project. When we put in the new spot price, if we were selling now, I mean, to note is that the whole project would be paid back in a little over a year. I mean, these are, it's a fantastically buoyant commodity market that we're coming into. And even though it's true, yeah, we are not yet selling our product, so this price is sort of hypothetical. It most certainly had a good effect on chivying along our negotiations with the final person who we actually did our deal with, the strategic. It will have a very good effect on the final negotiations with the underwriting syndicate we're talking to, because it enables them to use a more realistic long-term potash price as their stress test, rather than one that's just overly low. We know potash is a pretty well managed market. To use an overly low potash price as your stress test just causes you to be not to be able to take on so much loan to value, because they worry about your debt service ratios. In a potash price like this, the banks just get much more relaxed about it. So I think, again, that will play to our advantage in the deal we can strike on the project finance. And just in case the details of this strategic investment deal weren't clear to people, it took a long time negotiating this. The reason we've split it out like this, and it's is because the upfront $6.75 million was the money that we required to do all of the work, which is part of the capex, but work that needs to be done before we will draw down the full project finance. If we didn't have this money, we would have been coming to the market. Price that would have affected the share price quite badly, I would suggest. However, we've got this, and that means that the timeline is still intact, and we can negotiate at our ease with the banks, and even the ESIA, which everyone knows has been delayed, it is no longer causing any hold up at all. So getting some money at a small premium upfront was extremely useful to us. And and GSM totally understood that. And GSM wants to build this mine and get it into production. So it was doing what it could as well to make this a deal that worked for everyone. And getting this thing moving forward was key to them. So that's the first part. And then the later part at a much higher premium, which again GSM understood, comes from it converts when. It converts it's a mandatory convert in due course, but it gets drawn down only when all the project finance is in place. So in a sense, it's sort of low risk for GSM, but when the banking finance is put in place and the final tranche of equity, all of the money gets drawn down. And at that stage, the interest rate kicks in. And then that has a maximum of 2 years that it could run as an interest-paying debt instrument. But if the share price moves over 16 pence, which to refer back to the net asset value, would only put us at roughly 10%, 12% of the company, of the NAV, which is a crazy low thing for a company that's actually then financed. These converts automatically turn into equity. So, and the interest rate stops at that stage straight away. So it's done in a really nice way that it gives the banks the comfort that a large slice of the equity is in place as soon as the project finance wants to go, and it's relatively high interest, but not very high considering the type of debt instrument that it is. And in all likelihood, you're not going to see that interest rate being paid for very long anyway. And in a very good scenario, everything moves forward, and the investing party also cashes in its warrants, which brings in extra cash at the premium. So we consider that as part of the overall project finance package, this was a very neat solution for a company that had a low market cap at the time of negotiating this deal.
Okay, thanks, Charles. So I think what's important now is to understand what we're actually going to do with the equity, the money that's come in now that we're going to have in our bank account shortly. So this is actually crucial. The deal is an absolute trigger for us to push forwards with the rest of the financing, and talks with the banks have accelerated over the last week considerably already. We can see that they now understand that this project can be financed, and they're very keen now to progress their discussions with us. But also what the money that we've now got allows us to do is to push ahead with some pre-construction work and actually get the engineering, the basic engineering done, contracts awarded for that, and that work done starting towards the end of this month for one of those packages. So what I'd like to do now is just show you how we've actually divided up the construction into various work packages. This slide shows 4 of those. Number 1 being the connection to the highway, which passes the site. Number 2 is the process facility. Number 3, the portal and declines down to access the resource. And then number 4 is the remaining surface infrastructure on the site. And then the other 3 packages, number 5 is the tailing storage facility. And then 6 and 7, we have to bring power onto the site. That's a connection to the main power grid. So that's a 15-kilometer connection. And then also bringing water onto site. And this is a 20-kilometer pipeline from a dam fairly close to the site. So 7 key packages of work to be better defined through the basic engineering. So what we've decided to do in terms of our strategy is that Emerson will actually award these contracts to do the basic design to 30%, with a view then that once that is complete, we'll be in a much better position with a greater sort of level of granularity and detail to actually put out the detailed design, the procurement, construction to an EPCM contractor. People we've been talking to over the last probably 5 or 6 months who are interested in doing the basic design, it probably will be one of those that goes forward and picks up the EPCM contract. And we've had some really good conversations, not least in Morocco itself, where there are certainly 2 really good engineering companies, both with global exposure and global support from larger engineering companies, who would be more than capable of actually delivering the basic engineering and the EPCM contract using their expertise that they already have in country, which is really important for us. Because that gives us efficiency and, we'll control the cost as far as we possibly can. What we're actually doing, though, with the basic design, we've actually taken one of those out, which is the process facility, and that will go to a specialist engineering company because of the need to make sure we get the process design absolutely right for it to deliver the recoveries and the product that we've identified in the feasibility study. And then the remaining 6 will probably go to a second different engineering company to complete all of the remaining basic engineering work. And just to give an idea of, the sort of process we've been through with this, it was going back to April of this year that we actually went out and started to identify potential candidates to do the process engineering work. And we had proposals, tender received, and we actually were in a position of having negotiated the price down as it happened at the time, by the middle of June, we were actually ready in a position where we could have awarded that, moved forward and awarded that work to the engineering company. We weren't in a position with the funding in the bank at that time to really commit, because it is quite a large piece of work. But we are now, with the announcement last week, able to actually commit to that, and the plan is that will be awarded before the end of this month, and that work will commence before the end of the year. With regard to the other 6 packages, we've gone through a process of communication, discussion, sort of lengthy workshops over a period of several weeks with potential candidates to understand their views on it, and get their sort of feedback on our strategy and our approach. So we're in a position at the beginning of October to go out for expressions of interest and through a pre-qualification. We went out to 7 companies, as I say, 2 based in Morocco, but a number of global organizations as well. And we've had, we received back their initial responses. We actually narrowed the field down to 4 at that stage. And we've gone out for a request for proposal to those 4 companies, and that was towards the end of October. And we're expecting to get all of their proposals back probably about the end of this month. And it might be a push, but we're aiming by the end of the year to be somewhere near in a position to actually award that work for the remainder of the basic engineering. And the investment, our strategic partner coming in last week, it puts us in a position where we can actually really push forward with this. And this is actually work that was costed as part of the total capex bill. So it's something that we're actually sort of bringing forwards and giving ourselves a really good start with. We've been doing some work on site for the last 2 or 3 months. So, picking up from some of the areas of the feasibility study where we knew we needed more work, just to give us, much more confidence in all of the assumptions that have been made and allow us to feed into this design work that we're commencing now. We had to do a bit more drilling on site, and that's a combination of some deep drilling, which is holes down the line of the decline so that we can, fully de-risk the decline development, and also a couple of extra holes into the ore body itself that would actually give us more detail for the early years of mining, and a great level of confidence to put a detailed mine plan together over the next few months. That work's well underway. There's a couple of the holes on the decline been completed, and we're actually in process of drilling one of the deeper holes into the ore body at the moment. We've also done a series of over 20 shallow geological drill holes. That's really to give us the detail of the near surface geology, so that we can feed that into the planning for the portal for the declines, but also for all of the foundations for the process plant and the surface infrastructure. So we've done a combination of drill holes and also some geophysical work, and that is nearing completion, that work now. That should be completed in the next few weeks, and that's given us the valuable data now that the engineering companies can use with the work that they're going to do. And just on the right, that's a photograph there just outside the core shed near the site. And just to comment really that, the drilling that's been done, there's been 2 previous campaigns. All of the core samples taken are in this core store. It's fantastically controlled, and I have to say, my previous experience of exploration work in the UK, I think the way the core and all of this has been handled in Morocco, is actually superior to my experience previously. So we've got a great setup there. All of the core is packaged, protected, and there for anybody to see in the future. And then just this is just where we've been over the last 2 or 3 years. We have knocked off a significant number of milestones, and this brings us to Q4 this year with the strategic equity coming in. And I can't overstate how important that is to us. It is transformational. It has taken us some time, yes, and it's maybe taken us longer than we would have liked. But these things have to be done in a certain way and follow the process. So where it puts us now, though, is in a position where we have the banks now engaging with us, really, really actively engaged, with a view to getting the debt packages in place, and us to be able to announce who the lead banks are. And that process then really, is what takes us forward to financial close and the ability to start the physical construction on site. But it's also allowing us to do all of this pre-construction work, get the basic engineering done. That enables us, when we're funded, to be able to actually engage with the EPCM to actually start start the project and get us into proper construction. And we're still aiming at the moment. The timelines haven't changed with regard to getting into production. We believe that we can be in first production in the early part of 2024. So this really is a key event. The strategic coming on board. They're supportive, and as Charles said, they want to get this project built. That's why they've invested. They're not just investing to sit back. They've invested so that this project gets built. And I'll just leave this slide up as the last slide and just comment on it. And we do use the line, do the right things and do them in the right way. That is important. That is the way that we're working in the country. We have to respect our stakeholders there. We have to respect, that we are delivering this project in another country. And that means that, everything we do, we have to do it properly with regard to the environment, everything else, the interaction with the authorities. And that is a really important thing to us. And we do follow that with everything that we do, the team in Morocco and also the team working in the UK. So with that, we'll sort of conclude the presentation and happy to take some questions.
That's great, Graham. Charles, thank you very much indeed for updating investors this morning. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab situated on the right-hand corner of the screen. But just while Charles and Graham take a few moments to review those questions submitted already, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your Investor Meet Company dashboard. I'd also like to remind you that your feedback is important to the company, and immediately after this presentation's ended, we'll redirect you so that you can provide the company with your thoughts and expectations. Charles, Graham, I haven't given you a lot of time to look at the questions, but as you know, we received both questions ahead of today's events and throughout today's presentation. So perhaps, if I may, I'll start off the Q&A by selecting a few of those that we received today and ahead of the event. The first one, if I may, is the company anticipating any cash grants or subsidies from the Moroccan government?
Yes, absolutely. There's sort of a range of things that we can get. So there is some. Obviously, there's tax benefits, so a 5-year tax holiday once we get into operations, and also because of exporting the product, we do actually get a reduction in corporation tax as a result of that. So we get favourable corporation tax rates, and also in terms of actual sort of my more direct subsidies, it is actually up to a maximum of 10% of the total capital cost, but that's made up of contributions to the development of infrastructure, so the power lines and the water pipeline, for example, and some of the roads we will get a contribution for, and also for training and land acquisition. So that can go up to 10% of the total capital cost.
That's great. Thank you very much indeed. Turning on to the next question, has Graham or any of the team had a meeting with Leila Ben Ali, the new Moroccan Minister for Mines?
No, not as yet. I had planned, along with one of our non-exec directors, to actually be in Morocco earlier this month, and that the purpose of that visit was to get meetings arranged, if we could, with the new ministers that have announced fairly recently after the election. So we very much do want to meet with her, and it's likely now to be in the new year before we can get out of there, because as we were actually arranging various meetings, Morocco sort of closed any direct flights from the UK, so it's once again made travel a little bit more complicated. So we couldn't commit at that time to arrange meetings and be sure we could get there. So that is planned, and we will very much like to meet Leila Ben Ali in particular.
Thank you very much indeed. Next question around, I guess, investor communication. Can investors be better informed moving forward regarding important events?
Yeah, I mean, there's a few questions, and I've seen a couple of the live ones that have come in, and we do understand that shareholders want to be informed and kept up to date, but it is the case sometimes that when we're in the midst of going through a process, and the ESIA is such a process. As an example, we need to use a level of diplomacy, and we are working in Morocco. We have to be careful. And it isn't really appropriate to come up with short, periodic sort of minor updates, because our key target always is to get to the end of the process and get the result that we need. So one thing we do for sure, and the Nomad plays a part in this, is if there is something that is material or price sensitive, we obviously put it out by RNS straight away. So we will always do that. But it isn't always appropriate to give sort of minor updates as we go through things.
Thank you very much indeed, Graham. Just turning on to the next question, are there any updates on the SOP study?
So the SOP study was still ongoing. Probably surprisingly to us, we've had difficulty in actually getting meaningful quotes for the equipment, particularly the furnaces. The Mannheim process, it isn't that common around the world, and there aren't many new plants being built. So we have struggled to get quotes that we can actually use in the feasibility study. So that has caused some delay, but we're still working on that. And as soon as we can get something that actually allows us to have proper sort of prices and costings, then we'll let everybody know about that.
Thank you once again, Graham. Any updates on de-icing salt offtake agreement?
Yes, we have. We've actually got now a sales and marketing executive working, for us on this, along with the potash offtakes. So the salt, we are engaged with potential customers, and the target, we've got is a minimum of 2 million tons per annum offtake for de-icing salt. That is what we're targeting. We assumed 1 million tons per annum in the feasibility study, but we believe we can actually be more aggressive than that. So there is work going on with that, and as soon as we have any updates, we'll let everybody know about it.
Thank you very much indeed. Just moving on to the next question. Any conversations with OCP Group about taking on their mine?
We have had conversations, previous, and we've had conversations this year with OCP, and obviously there's logic in that happening. Though they have an area of the same deposit, but what we aren't doing is sitting around waiting for those conversations to develop into anything. We're focusing on actually getting this funded and built. So there is the opportunity for OCP to talk to us at any time through that process, and it still remains logical that the product that they're currently importing into the country, if it's there available in country, would be supplied from ourselves. So but our focus, as I've said, and the team's focus is we're putting in place what we need to put in place to build the project and get it into production.
Thank you very much indeed. If I may turn to the next one, can any equipment be bought cheaply from the administrators of Salt Lake?
Well, it's quite possible that there would be equipment that's there if they're prepared to release it that might fit in our process plant. But really, I've just been saying that we're going to award the contract for the basic engineering for the process facility. It's absolutely key that this is done by with the right expertise so that we get this right, because it has to deliver our product to the right spec and in the right quantities. So that is a key piece of work. We need to do that. That will identify exactly what equipment is required in our process. But we will stick to what we're doing, which is making sure our process plant works. So it isn't really the time to be considering looking at second-hand equipment or nearly new equipment from somewhere else.
Thank you very much indeed. Moving on, I believe the London office doesn't exist anymore. Perhaps to save money, good prudence. Perhaps you can give some clarity on that.
Yeah. We finished the lease on our last London office just before the pandemic struck, actually, and so it made no sense to take a new one. Graham's based up in Yorkshire, so is Josh, project controller. I'm down in London. Felix, various of us are down in London. At the moment, we don't require an office. It's we don't want to spend extra money on stuff we don't need. We're quite cost conscious, but it's not really a sort of something we would bother making a release about either. As we tool up and get into production, we may well require an office, but for now we're coping very well without it.
Thank you, Charles. Thank you very much indeed. Is there a new targeted timeline for everything now? Just dates that you would like to see things happen?
I think the key thing I've maybe already commented on it is that the timeline, in so much as first production is still achievable in the early part of 2024. That is ultimately, that's the end of the timeline. So that hasn't changed. Obviously, other things in between do take longer, or some things come quicker than you expect. So but the key thing is we know we can still get into production in the early part of 2024. I think the key now is that the strategic cornerstone investor really is the trigger for the debt process to kick off in anger, and that is what's happening. The amount of discussion calls, meetings that we've had in the last week since then has escalated considerably in relation to that. So that process is moving along now swiftly. That ultimately, going through the bank's process, their sort of detailed due diligence and getting to financial close will sort of dictate a lot of the other events and when they actually start. So physical construction starting on site obviously only follows that. So, there is some movement. We know we have some flexibility in timings, but we still remain confident that first production in the first part of 2024 is where we're heading.
Thank you very much indeed. Could you elaborate on how you see the eventual debt to equity makeup? Will there be more equity finance and hence further dilution?
Yeah, I think you want to use a rule of thumb of kind of around 2/3 debt, 1/3 equity. And so, yeah, we're likely to see another tranche of equity, a final tranche come in. I think what's sort of to note really on this front is that the deal we did with GSM actually didn't tie up the offtake. So we would have thought a year ago that the strategic investor that we got in would want the offtake. Actually, so we still have that trump card in hand. So it wouldn't surprise me if we did a large part of the final tranche of equity with another strategic. But yeah, I mean, when we get to announce the final sort of debt package, people will be able to roughly estimate what the final equity tranche will be. What they won't know is how much of that, if not all of it, is done by a final strategic core partner who probably wants the offtake. So we will see all of that in the coming weeks and months.
Thank you very much indeed. And I think the final question that we received, which was quite long-winded, but really just talks about options and warrants, and in terms of that dilution, just wondered if you could just give a bit of clarity around that.
Well, ultimately, the award of options is a board decision, and they'll make that based on a balance of sort of incentivization and and any further dilution. It's not something that we've been focused on. I have to say, it's not in my mind at all. We're focused on doing. We've been completely focused on getting the deal done with GSM to get that over the line, and now we're focused on the bank process. So it will be something that the board will bear in mind, and we are bringing in new team members to pick up specialist areas that we need to cover off now. And if it's considered that it sort of provides an added incentive to people, then it may well be considered, but it wouldn't be any significant level of dilution, if we did issue some more options to employees.
That's great. Well, thank you very much indeed. So I don't know whether it's worth one final scan of the Q&A tab that's on the right-hand corner of the screen, in case there's anything there perhaps potentially that I've missed that you didn't touch on within the presentation, or indeed you felt that you wanted to add any further comment. We do have a little bit more time. And as I said, thank you to all those investors that have submitted questions. And as I say, whatever we don't get through to today, we'll make sure that they're available. And if responses are appropriate, we'll make those available to you. So Charles, Graham, I don't know if there is anything further that you see there that you wish to...
Well, question from DW, who has been trying to get in touch via our online contact form. I'm sorry if that has not, it's obviously not worked. We will look into what's happened with that. We do try and, it's our policy to try and be pretty good at replying to investors. So sorry about that. We will check that. It might be a glitch on the website.
No problem. Of course, if he can put his details in the feedback, we'll make those available to you as well.
Okay, there's a question here from Michael T. Can you provide some insight into how you plan to fill the 2,000 jobs that the project will create? Does Morocco have the expertise on the ground to construct the mine? So I think the answer to that is, in terms of is the expertise there, that's absolutely yes. And that's something that we've been very impressed with in recent visits. we've engaged with a couple of companies, engineering companies in Morocco, and they are experienced in actually constructing and operating mines. There are companies in Morocco that do that, and been on mine visits. And I've been, my whole life's been working in mines and abiding by UK mining regs, in difficult underground conditions. And I have to say, the standards in Morocco, I was very impressed by the level of skill, very impressed by. So there is most definitely, the expertise in country, and we are going through a tender process to award the basic engineering, and we will do the same for the EPCM contractor. But there are most definitely options in Morocco to use engineering companies based there who most definitely have access to all of the expertise we would require, both for the construction and then actually, for starting operations. Already commented on, OCP and the scale of their mining operation. Yes, it's surface based, but in terms of process expertise, that is there in country. So the country is very well set up to be able to supply the labour. My experience historically at Cleveland Potash, a lot of the labour for Cleveland Potash, probably 80% was sourced locally, from people with no mining experience. And, people with sort of, basic transferable skills can become very good mining people, and particularly farmers, in my experience, make excellent underground miners. They can operate equipment and probably have been doing, from an early age, and, they have the right sort of mindset. So there's no doubt that, the sort of pool of labour is available, and there's a high level of expertise already there for us to take advantage of.
There's a couple of questions around the equity, both the deal we've done recently and future equity tranche, which I just tried to address. But on this one of how come we didn't put this to shareholders, and was it dilutive? Well, I think that it's pretty obvious that it wasn't dilutive, because it was done above the price that people could have been buying shares if they didn't want to be diluted. And with the nature of these sort of big bilateral cornerstone shareholder type arrangements, is that you just do the deal in a bilateral way, and you don't also then try and make it a marketed offering. So shareholders were not going to get included in this sort of deal ever. But that's not because we weren't trying to look after them. We tried to look after them by structuring it so that it came in above the share price that they could have been buying and selling shares for anyway. So that's how, I'm afraid, those sort of deals are always handled like that.
There's a question here. Can you tell us more about the strategic shareholder? Did you have more than one potential strategic shareholder to choose from? So we have talked to a number of strategic shareholders, potential partners, and we are still talking to some. We still, importantly, have the offtake available, the potash offtake. So it is quite possible that we can engage with somebody who wants the offtake and is prepared to invest, on that basis to secure some of the offtake. So there are still opportunities there for people to come in. We have talked to a number, as we've said, over the last 12 months. We've been talking to a number of people who've been in the data room and have assessed the project. In terms of the party that have come in, GSM, we've put some detail on them in the announcement, but they are looking to. They've invested in several projects. They're looking to sort of expand outside of Asia, so they've invested in projects in Australia, also in North America, and in every case, it's there to either take a project through into operations or to support a development to achieve that. So they're very much focused on looking at the sort of projects such as ours. So that was sort of a mutual sort of contact, if you like. They were somebody that we were looking at, but they were also looking at us, and it's they are a really good partner to have, and we're very much looking forward to working with them.
Well, when is it envisaged full bank funding will be required and agreed? So as Graham said, certainly we are aware that having landed this strategic has accelerated the debt process. The debt process had been going on for about 6 months before this. And we already had a fairly good idea of the banks who were interested. They liked the look of all of the numbers in the feasibility study, which have obviously only improved with the potash price. But, you know, they also were thinking, but are you guys ever going to get the equity? So now that we've shown, we were never going to get the full equity before doing the debt, but now we've shown a significant part of it put in place. They've all jumped into action. So hopefully we'll see movement on the underwriting syndicate pretty soon.
Graham, Charles, I'm mindful. I do know that we had the meeting scheduled for an hour, but I do know that you had a meeting that came in also that kind of overlaps with the closing of the meeting. Yeah, I don't know if there's any final potential question I could ask you to look at. And as I said, we will make all the questions available post the meeting so you can reflect on them and publish responses where it's appropriate to do so. I don't know if there's anything final that you want to look at.
No, I think it's fine.
Perfect. Well, look, thank you very much indeed to you both for updating investors this afternoon. I know investor feedback will be particularly useful to you and important to you, and I'll shortly redirect investors to give you their thoughts and expectations. But perhaps, Graham, before doing so, I could just ask you just for a few closing comments to wrap up with.
Okay, thanks, Mark. Yeah, so I think, you know, last week was the culmination of a huge amount of effort from the whole team to deliver the strategic investor. And that really is hugely significant. It's a trigger for the rest of the funding. It enables us to progress all of the engineering work so that we can actually be ready to start construction once we have the funding in place. And it's you know, what they've basically done is they've assessed the project in detail. They're sort of completely supportive of what we're doing. And you know, they believe this project is going to go through into operations, and they'll support us to do that. The team is focusing on delivering exactly that. We would very much hope to be able to update on the progress with the debt funding in the not too distant future, and obviously the environmental approval. So, you know, we're really moving forward now, and, you know, this gives us the opportunity next year to actually get funding in place and get into construction. And the target, as I said, still remains for first production in the first part of 2024. So thank you, everybody, for listening. We've tried to answer as many of the questions as we can, and look forward to your feedback.
That's great. Graham, Charles, thank you once again for updating investors this afternoon. Ladies and gentlemen, please do not close the session, as we'll now automatically redirect you for the opportunity to provide feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be highly valued and greatly appreciated by the company. On behalf of the management team of EMMERSON PLC, we'd like to thank you for attending today's presentation. That now concludes today's session, and good morning, not like I said earlier, good afternoon to you all.